Welcome to Out of the Blank.
Welcome to another episode of Out of the Blank podcast. I'm here with Jim. Jim, it's a pleasure to have you on the show. Can you please introduce yourself to everyone out there listening?
Okay, my name is Jim Butkiewicz. I'm a professor of economics at the University of Delaware.
And I reached out to you to talk about the Great Depression, mostly because it's probably an area of my generation. We hear about it briefly in history class, but it seems to have long-lasting significance only because my great-grandfather was born in the 20s. It was something hard for him, and I always heard about it through my family, but I'm very, very basic when it comes to the knowledge of it. Can you explain a little bit about what it is?
Okay, well, the Depression was the most severe economic downturn in American history. The economy was growing and prospering, although, when you say prospering, there's always unevenness in the distribution of income. But the 20s were a prosperous decade overall. People were getting wealthier. And then the Depression hit, and the unemployment rate, which was 3% in 1929, had reached 25% by 1933. So it was a severe downturn. Many people lost their jobs. People who continued to work often took pay cuts. And people lost their homes. There wasn't the social safety net that we have today. There wasn't federal unemployment insurance or things like that, or provision of food or anything like that to the needy. So people were really, they were hungry, they were out of work. They didn't really understand what had happened, why it had happened. And, they pinched every penny because they didn't know, when they were going to need money again, when they were going to work necessarily, where their income was coming from. It was a very difficult time for a lot of people. Now clearly some people never suffered, and economic downturns are not a democratic phenomenon in that everybody's affected. In some economic downturns, people don't lose their jobs. They continue to work. They continue to collect a paycheck. Firms continue to make money, but some people who are out of work, it's really a difficult time. They really suffer. And all sorts of social problems tend to increase when the economy suffers a downturn.
Can you tell me some of the social problems that were going on during the Depression? Because I just remember when my great grandfather passed away, my dad was like, look through the floorboards. I was like, what? He was like, he stored money everywhere. He did not trust the banks. I was like, what? And it was like this thing where it was like, what are we talking about? You end up finding holes in walls behind pictures where money was stored. I mean, to me, that's an impact. That's some trauma that happened that caused him to do this type of stuff.
Yeah, generally speaking, more the post-depression recessions, we know things like crime go up, family problems go up, divorces go up. Financial problems are very stressful, and when people lose their jobs and the financial stress mounts, that can often lead to other problems as well. One of the phenomena that most characterizes the early depression years, the downturn from 29 through 33, is that starting in the fall of 1930, we started to have significant banking problems. The banking system back then was very different than it is today. There was made up in many parts of the country, mostly small individual banks with no branches, just a single bank in town. And a lot of those banks failed. Overall, from 29 through 33, 9,000 banks in the country failed. Now, it was not uncommon for banks to fail throughout the 20s. In almost every year in that decade, we had over 500 bank suspensions. But it got much more severe, particularly in 30, 31, and 32. People lost money. Your grandfather, believe me, wasn't the only one. When I lived in Virginia, I knew a woman, she and her husband had lost money in a bank. She would not accept a check. She didn't trust banks. Not trusting banks was one of the results of a lot of banks failing. There was no such thing as deposit insurance. Deposit insurance was created after all these banking problems as a potential solution. That began in 1934. So people who lost money in banks, they didn't trust banks. They didn't think banks were safe. They were always very frugal. Um, my father-in-law, who lived to a ripe old age, was that way. I often said to my wife, he's still living in the Depression. It had a very significant impact on people who, again, money was scarce. Their incomes were low. They weren't living a prosperous life, and they became very cautious. My father-in-law, anytime he could get something for free, that was like catching a big trout or finding a $10 bill or something. It was. I know exactly the type of person your great grandfather must have been, because I've known those people too.
You would have thought a 2 for 5 deal was like he just won the lottery or something like that. Like he was off his rocker, man.
Yeah, it's that was really something to them, because and they talk about the World War II people, many of the same people, the greatest generation. They were young, had grown up during that period, and they just didn't talk about a lot of things. They didn't talk about their wartime experiences. Even today, we're seeing people are trying to interview the last few remaining people still alive, and families will say, "In 70 years, I never heard that story." They kept a lot to themselves, but it was a tough time for people, and you know, things started to get better, but unemployment remained in double digits throughout the 1930s. The economy started to recover when Franklin Roosevelt became president, and things were going well. And then there was a setback in 37, 38, and unemployment jumped back up to 19% from 14 it had been. And then by the time we got into World War II, we got down under, 10%. In fact, in a couple of the war years, because everybody had a job, men were all in the army, the unemployment rate was, under 2%. Things did change, but it was a decade long situation where people, experienced a lot of hardship, a lot of difficulty. As I said, it wasn't universal, because some people continued to work and prosper throughout the decade, but a big segment of the country really suffered. And there was a recovery, but the recovery was very slow, a lot slower than we might expect a recovery to be today. It took a long time.
Did we, I guess, build safety nets after that? Like, I mean, when this impact happened, when this depression started, I mean, was this Black Tuesday where like all the stock market and everything goes down like that, or is that something completely different?
No, that's October 29th, 1929. Actually, the stock market went through a real boom from March 3rd of 28 through September 3rd of 29. And so that was 18 months. And then it started to decline, and it was orderly. And then actually the week before, on Thursday, October 24th, stock market troubles began. They got worse on Monday and Tuesday. Tuesday is the most known day, but there were actually a number of days, and the market continued to go down through November of that year. And it basically lost 90% of its value from what it had been at the peak. So most people in that era didn't own stocks. Wealthy people did. The average individual probably didn't. Today, ownership is much more common through mutual funds and pension funds, but still, probably almost half the population, even today, doesn't necessarily own stocks. But it was a much smaller percentage back then. So yeah, that was part of it. But the economic decline actually began in August, before the stock market crash. And most economists feel the thing that really caused it to get out of control were the banking difficulties that began in 1930.
So were the banking difficulties just because people were putting too much money in the bank and pulling too much money out, or was it something to do with war? What was the change?
Well, there was not deposit insurance, and so if you heard that your bank was in difficulty, people would rush to the bank to try and pull their money out. And the banks only keep a small amount of cash in reserves. Most of your deposits are out in loans or in securities that the bank would buy to earn income. And if the banks had made loans and the loans got in trouble, that would reduce the bank's ability to repay their customers. And often, they tried to cash out some of those loans or sell them, and they often had to sell them at lower prices than the face value of the loan. And that would mean they would lose money. And after a while, the banks would lose enough money that there wasn't enough left to repay their depositors. So bank runs were very common. People, it's a very old movie, but some people may still watch a movie around Christmas time, It's a Wonderful Life.
Yeah.
And there's a scene in that movie that really depicts pretty well what was happening to the banks. The bank in town got in trouble, and the customers of the building and loan, George Bailey's bank in the movie, all ran to get their money out. And he tried to explain to them how they didn't have that much cash in reserve, and he did encourage them to take only a little amount, not their whole deposit, and he was able to make it. In fact, in earlier periods, because bank runs were not uncommon in U.S. history, in earlier periods in history, banks would often limit the amount of money people could withdraw. They say you could write checks, you could transfer checks and so forth, but you can only withdraw 5 to 10% of your cash. In the Depression, the Federal Reserve didn't want banks to do that. Now, in the end, they did that, but it was a long time in coming. So people would rush to the banks, and there'd be these banking panics, and that was a big part of the problem. And as I said earlier, it wasn't until after that legislation was passed in 1933, after Roosevelt became president, that began federal deposit insurance in 1934, and that has done very well in eliminating that type of banking problem since the Depression. We've had other banking problems, but deposit insurance has certainly helped deal with the one type of problem, the bank runs. The people just panic and try and get their money out. And you mentioned safety nets. Yeah, we didn't have them. It was 1935 when we passed the Social Security legislation that created unemployment insurance and providing some money to people who might live to a certain age where they wouldn't want to be able to work anymore. Yep, people probably don't understand. Retirement age was set at 65, and life expectancy back then wasn't 65 years old. Less than half the population reached that age back then. So it was only a small fraction of the working public, probably less than half, that in the early days that were collecting Social Security. So things changed a lot because of the Depression, and things that we take for granted now didn't exist back then. And that's, again, it explains, your grandfather, people had to be great grandfather, right? People had to be very self-reliant on themselves to try and take care of themselves. They really, had to be self-sufficient in a sense. So every dollar counted, every dollar behind a picture in the wall was valuable. They just lived through an experience that it's hard for us to really imagine today, because the world was just so different. If you see, years ago, and a number of people did this years ago, PBS did a series on the Depression, and I still show it to students because I teach a class on that. I show one of the hour-long videos, and it's I wonder if my students think they're watching life on another planet, because the people were so different. The way they lived was so Spartan compared to the way we live now. It's just lots of people didn't, parts of the country, the poorer areas, rural areas, didn't have electricity. The appliances that we take for granted were not common in some households back then. So it was a very different world.
Yeah, you learn a new definition of the term clean plate club when you live with someone or you stay at someone's house who went through the Depression. You weren't allowed to put any excess food on your plate. You had to make sure every single bit of it was gone.
Oh,
And
yes.
you just learn, like, the thing I could like try and understand it a little bit better, besides like, knowing someone that grew up in that time. But I mean, the pandemic, but we had unemployment benefits. I mean, I didn't get it until like 6 months in, until after we opened up and everything. So I could understand that struggle of stuff, but there's still food. there was still these types of things. I'm curious, when we talked about social change, was there the initial when that collapse happened, was that the worst time, or did it you see it increase a little bit in when people couldn't were just going broke and were just no food? I mean, did the government do anything like give them a piece of bread a week or some types of stamps? None of this was available.
No, one of the more famous things from the Depression was the notorious gangster Al Capone opened up a soup kitchen in Chicago, and you can find pictures on the internet of a line of men outside the soup kitchen waiting to get in so they could get a bowl of soup. So Al was generating public support because it was also the era when prohibition was still in place, and prohibition was a very controversial amendment to the Constitution. I don't think the majority of the population supported it. It actually wasn't illegal to drink. People were allowed to make their own alcoholic beverages. What was illegal was, the sort of commercial production of it. But it was widely produced regardless because there was the huge industry of illegal production of alcohol, and people like to drink. So Al Capone was a popular guy because people wanted their beer. Um, and it was just different. But remember when the pandemic started? When we all said what, maybe 6 weeks, 2 months, and 2 years in, we were still
Yeah.
trying to figure out the depression. Unemployment was 3% in 29. It was about 8.5% in 30. I think it got to 16% in 31, and then 32 and 33, it was 24 and 25%. So I always say we didn't really drop off a cliff, but we slid down a very steep hill. It got worse and worse as the years went on, up until Roosevelt came into office and took some actions immediately. And there was a palpable sense of things are going to get better, things are going to change. But it took a long time to recover from the downturn, that 3.5 year slide down the hill that we took from 29 through the beginning of the first months of 1933.
My first thoughts go when we talk about Al Capone opening up a soup kitchen is how many people were just on the brink and did not want to turn to the mafia or turn to any of the mobsters to take care of them, but had no choice. I mean, first of all, I mean, I don't think he's doing it out of the kindness of his heart. I kind of think he's doing it just to grab public opinion a little bit, sway it into his favor as help. Maybe, I don't know, but the government definitely probably saw that as a huge issue when you start looking at, Al Capone's getting in the newspaper serving soup to people. And we know that's not why he's doing it. So it just
Yeah.
has people turn. I mean, we don't know when we get into a crisis. Look at the pandemic. When people get into a state of like the world's going to end tomorrow, they do crazy things. They go around, they try I mean, I think when I had someone on here talk about the supply chain, he mentioned that the Jif shortage of Jif peanut butter. And he goes, you could just choose another peanut butter. But when the media says you're out of Jif, everybody flocks to the store and starts panic buying. And it's like,
Mhm.
yeah, we don't realize the essentialness of, either rumors spreading that banks are running out of money or media's attention of banks are running out of money. What that overall does, it has people in the state of like, I have to get money somehow. And if that can get, depending on how long the situation lasts, if it lasts 5 years, 4 years or something, you have someone trying to rob somebody to get their money because they're gone broke.
Yeah, I mean, well, what you're talking about is what just like an illness, just like the pandemic, it's contagion, and contagion works in economics like the bank panics, where if one bank got in trouble, it often led to trouble for other banks, even if they weren't in financial difficulty, just because people were uncertain and, as you said, fearful, and that fear would spread, and I better get my money out. And again, the world was so different. Um, a lot of people didn't have bank accounts. When you got paid, I'm old enough to remember this. I was very young. I was in high school. You got a pay packet. I would get an envelope, and it would have some dollars and some change in it. And there'd be a little slip that told me what my gross earnings was and what was withheld. And you actually got paid in cash. You
Not
didn't
a
have,
digital card.
and that's that back in the 20s, that was probably the way most people got paid. They got paid in cash. And they spent cash, and they dealt much more in cash than than checks. So not everybody, but a substantial segment of the population. Even today, the estimates are, I think it's about 8 or 9% of our population in the United States do not have bank accounts, which may seem strange, but the percentage back then was going to be much higher. It was much more common to pay in cash. We didn't have things like universal credit cards. That was very unusual. If you uh, knew somebody who owned a store, you may get some trade credit, which meant they'd keep a little journal and you could charge some things and they'd expect you to come in and pay on it once in a while. Even when I was very young, I remember my mother going shopping and she had a wallet full of credit cards because each individual store had their own credit operation. It was only in the 1960s, which is probably a long, before the time a lot of your listeners were born, but it wasn't until then that the precursors of MasterCard and Visa came into existence and stores started accepting general purpose credit cards. Before that, that was not the case. So in the Depression, there wasn't anything like that. One reason is you didn't have the information technology. The only way you could get credit is if you knew people. I remember talking to a man once when I was young, and uh, he ran a tire business, replacing tires, and he said to me, um, "If you need credit, you don't have any friends." And what he meant was, if you knew people and you needed money, they might extend you credit, or he might put new tires on your car and expect you to come in and pay, $10 a week. Or tires were a lot cheaper then, but a certain amount of money, and he could trust you because he knew you and you knew him. But the sort of life that we lead today is people from back then, if they came alive today, would think they're living on another planet too, because it wasn't anything similar to the sorts of things that we take for granted today. And remember, we didn't have the first public radio broadcast until 1920. Owning a radio was a pretty expensive operation. Often a radio was quite expensive compared to what people earned in a week or a month or so forth. And those were those big old, your great grandfather may have had one of those big old wooden things that were sort of ornament, very fancy done, and had a sort of a mesh screen in front of the speaker and had a lot of tubes in it.
Yeah, turn them on.
That was a big deal to people to actually have radio and have that sort of communication back then.
When it comes, I mean, does that, with the era of like technology that we have now, I mean, is it good that we have credit cards and digital money? Like, I mean, you just have a bunch of numbers and zeros in your thing. It's not as essential as keeping cash in like your bank reserves. I feel like that has to be a benefit in some aspects, but the downgrade with that is that you don't have a community as much. I mean, yeah, this is connecting, obviously, but when it comes to like, you had to know your barber, you had to know your mechanic, and they had to trust you and like you. You had to build up a relationship to where you would be credible to pay back these things. Like, I don't even think I have a credit card. I always get yelled at because like, you got to build your social credit up. I'm like, I don't want another thing I have to be responsible for. It's just, you get in debts. It's like, I like the cash thing, but I see everywhere now we're in chain shortages. And I'm like, yeah, because we just spent like for so long now, all self checkouts, usually card. It's how everybody pays now. Now it's getting to Apple Pay. Like that was weird. And now it's normal. And I'm just like, it's, in some aspects, it has to be good, I guess, maybe because it's like you don't have to worry about keeping money on hand. You could just put digital zeros and all this type of stuff, but it has to open up a whole era of problems. Also, what happens if all the machines stop working and you can't use your card?
Well, do you remember Y2K?
Yeah, the 2000 thing.
When they were afraid that the computer systems were going to break down. And actually, the Federal Reserve, our central bank, made a lot more cash available to the banks right before that. It turned out to be much ado about nothing. But everybody was worried that there'd be these runs on banks and runs on ATMs when the computer systems all broke down, and nothing broke down. Everything was fine. But life just evolves. You know, Societies invented money as a more efficient means of engaging in transactions than barter, trading goods for goods or goods for services. And over time, money has evolved. First, it was coins, then it was paper money. Then we developed checking, and now, and then we developed debit cards, which is just an electronic check. and credit cards, which is a form of borrowing that you still have to make a payment on at the end of every month. But it's just an evolution of the way in which payments are made. In Sweden, they've tried to go completely cashless. There was a concern during the pandemic, turned out to be not really a concern, but money would carry germs. And, did you really want to use cash? Did you want to be careful about putting your credit card in the gas pump because there may be germs on the gas pump? It turned out those surfaces weren't good transmitters of the germs, but we didn't know at first, so we were very cautious. And I've seen things on the news, when we had uh, pandemics earlier in history, like the Black Plague and so forth. In Italy, they actually built buildings with a hole in the wall so that if you wanted to buy a drink or something, it would be passed through the hole so people would minimize their contact. So they had social distancing even back like in the 1300s when they had problems with communicable diseases. Um, I don't know. The payment system evolves. People find it more convenient. There's certainly some advantages to not dealing in cash. One, it's safer in a lot of ways. It avoids theft. Uh, you know, Not only theft from people coming in and robbing a store, and you still see that with convenience stores, but employees stealing money from the business. I often hear, "Oh, this store went out of business." Why? Well, they found out the manager was stealing the money. Those things happen. When I was in college, I worked for a while in one of the drugstore chains, stock shelves, ran the cash register and stuff like that. And these weren't 24/7 operations. They closed at 9 o'clock, and there were only a couple nights a week they were open. And at the end of the night, the manager would go around and collect all the money from the registers and leave just a little bit in one register for opening. And he'd put it in an envelope, and then he'd have me walk with him down the street to the bank to put it in the night deposit. And I always said, I guess I was a witness and a bodyguard at the same time. So the two of us walked the bank together with the envelope. There wasn't nearly as much crime in that town at that time to worry about, but I would accompany him to the bank at night near closing, so he could put all the cash, because cash is uninsurable. If your store is robbed overnight, businesses don't keep a lot of cash on the premises. That's why when you go into Starbucks in the morning and offer them a 20, they ask you for something smaller because they don't have change. Because somebody could break in overnight and steal the cash, so you don't keep it on the premises. You get rid of almost all of it.
Well, it's gotten to this point now where people paying cash, if they pay in anything over a 50, everyone's very, very skeptical about where this bill came from. I started to notice, like, I work front desk at a gym, so we have $100 and something in the register, and then someone comes up and they go, "Here's $100 bill." I'm like, "Okay, I got a bunch of ones, 10 ones, 15 ones, and I have $100 bill. I can't give you change for that unless you want to just do an exchange of 100 for 100. We could trade $100 bills." But it's like this weird thing where it's like most of the time it's just weird to me now when someone pays with cash. They want to pay with card most of the time, and it's very easy. But that convenience factor scares me because, I mean, credit cards can get hacked. I just had mine hacked the other day. It got locked and I couldn't make any transactions from it. But I mean, the transaction, I get like in-person robbery is different, but this is like you don't even see your money. You just pray when you get up to the machine and you pay, you got your card says approved on it. And it's like a whole disconnect. Like it's in someone else's hands now, but also means that they have to guide it too. And that's where we go back to like the depression thing. You try and take $1 from my grandfather without asking, do anything like that. You're getting basically, I don't know, thrown in jail. You're doing whatever because he was so protective over his stuff. All of his belongings were his, and that's kind of what I do with my stuff. All my stuff is mine. And you start realizing at that point where you're at your lowest and you only have a certain amount of things, you learn to protect them, you learn to value them more. They become the only thing to you. And that's just different where we have today. It's like more of a minimalist aspect of things, not because you want to, because you're being forced to when you start to adopt these features of like, I care about these things that are now mine.
It's funny, and I always thought, and it's interesting to hear you say that. I always thought it was maybe because I was older. Um, I have a more difficult time parting with cash than I do with just sticking my credit card in the machine. Somehow that's, that almost doesn't seem like real money, where cash, I know that's real money. And so that means a little bit more to me. Not that I don't spend it, but it's like, oh yeah, got to part with, $10 because I have $30 in my pocket or something. And that's sometimes a little harder to let go of. So I understand that. And sometimes all the electronic stuff seems just like, is it really real? All that stuff there because you don't have the stacks of money. But you're right about the hundreds. Everybody worries about counterfeiting. One thing that's not well known, there's a huge amount of US currency outstanding. It's over $2 trillion. About 80% of it is in $100 bills. And yet the most common used currency note in the United States is the $20 bill. We think about half of all our money is outside the country. A lot of the rest of it's used in illegal transactions where, you go to the movies. I don't see this in person, and somebody opens up a briefcase or a bag and it's full of hundreds and fifties and stuff. That's actually probably very true. That's where a lot of our currency is, because studies that the Federal Reserve has done think that households their normal usage of cash only accounts for about 5% of that $2 trillion. And the rest of it's doing who knows what.
I think a lot of the cash shortage probably too is on an aspect of not just people using cash less, but I think it's because of these ingrained factors that they probably got from their family members, their grandparents, their great grandparents. I mean, I still have a bunch of cash, just they're not in the banks, it's in my house. And it's not, I could say it's because I like looking at it, sure, but it's just different. I like seeing my money there. I did that with my paychecks. I never did direct deposit for the longest time until I was forced to, because I like to see the cash in hand. I liked, and it was difficult. You would get reaction. Why don't you open up a direct deposit? It's like, no, I want to. This is different than seeing ones on a screen. This is holding the thing in my. I like the art on the bills too, but I was mostly a lot of the time spent a lot of time with my great grandfather, so I picked up a lot of these depression type or I guess traits, I would say, which I mean, he found it like I always found it interesting with him. He didn't really care so much for politics, but the way he talked about it was like it had a sense of importance and like the grandest aspect, not like how people talk about it today. We're like, oh, Trump or Biden or any of this. He was like, you need to start looking at like the real essential qualities to what's going to happen. And it made me think, was that because of such a trauma like the depression that you had a bunch of people now paying attention to who they're electing, paying a little bit more attention to the economy and other things that are going around with legislature or something like that?
Well, if you look at public opinion polls and sort of the history of the polls, if you go back to those eras, you find that people then had a much greater faith in government than people do now. People are much more skeptical of the government, or they only either believe in Biden or Trump, and they'll never believe in the other one. Where at earlier points in history, it was probably we're going to believe in the government. We may disagree, but we think overall the government is a useful and valuable institution. And so a lot of that trust has been eroded. And it's not that people didn't have strong feelings, but they overall, I think they had greater faith in government than they do today. There's an awful lot of skepticism today about the government, and that's an evolution over time that people would, uh, point to different things that have happened that have led to, the lack of trust in government. So it's been an evolution, but I think people at that point in history were much more inclined to have faith in government and other institutions in society than we have today.
Did you see anything during the depression? Did you see any communities like not just government, but just actual like people really can like during the pandemic, you noticed the first 2 weeks, everyone was like, I'll get your groceries. And then everyone kind of went back to being their old regular selves and not caring about anybody else after 2 weeks. But so I was curious, is the depression lasted a long time, and this wasn't a thing that I mean, maybe they thought the next day it would get better, the next day it would get better, but was this their overall sense of learning and talking to your neighbors again? I always wondered that. I mean, my great grandfather was very friendly with his neighbors.
Yeah, well, there was certainly a sense of community back then where people would help each other out. And as I said, there was no federal government safety net, but there probably churches and other local organizations would do more to try and help people out and take care of people who were suffering. That, and I mean, we still have that today, but I think they probably had a bigger role in that, because today, we have the government doing things that at earlier points in history, private institutions and private organizations would try and do to help and care for people. And I'm sure you had a lot of communities where people would try and help one another out, or families would try and help family members out. Um, so there was, more of that probably then than we have today, because we expect the government to take care of these things for us now.
When it officially ended, when it was over, what was that official day, and what was the giant events that started changing every single thing? Like, obviously you had the federal, the loan, but when, like, were there anything else that were giant changes, like people starting to, get, at least some help more, like government influence, I would say.
Well, as I said, the economy was actually recovering beginning in 1933, and the upward progress continued to 37. Then there was a downturn 37, 38, and then it began again in 38, going up. I think if you talk to a lot of people from that era, we could get in debates about this with economists, but I'll give you the public perception. The public perception was the Depression really was ended by World War II, because everybody had a job, factories were producing overtime, the economy was humming because of the war effort, and unemployment went way down, and people had a lot of money, and they actually didn't have the goods to buy. People saved a lot of money because everything was being produced for the war. Cars weren't being produced. They actually had rationing of gasoline, not because gasoline was scarce. We had at that time plenty of oil in the US. We didn't have rubber for tires. And it was during the war that they developed in a lot of countries around the world synthetic rubber from petroleum to replace the rubber from tires, because most of the rubber that had been used in tires, the rubber plantations were in Southeast Asia, and Japan had taken control of those countries. So we weren't getting any raw rubber anymore to make tires. So we wanted to limit people's driving to conserve their tires. So the war was a time of people had a lot of income, people had jobs, there was great social change. And before the war, there was a lot of sort of society, it wasn't, I don't want to put this in too much of a negative term, but there was this belief that there was women could only do certain jobs. Okay. And during the war, when all the young men went off to war, women started performing a lot of the tasks that previously were thought to be only men's work.
Rosie the Riveter.
That's exactly it. And the image changed, that, yeah, women were much more capable than they were given credit for earlier in history. There were tremendous glass ceilings for women, that they could not go very far in a career, and they were restricted to, just some very secretarial work, nursing, maybe working in a department store. That they just weren't given a lot of opportunity, and the war changed that too. And the war changed higher education. Before the war, a very small segment of our society went to college, but with the GI Bill and the return of all the people from the military, college became more of a middle class phenomenon, where previously it was for the upper classes, the extremely bright who could get a scholarship, and quite frankly, athletes, because college football has been important for 150 years. People love it. And so if you were good athletically, you could go to college and play football.
That's yeah, that's one thing. Football. As soon as you said that, I was like, I already knew it before you could say it. So when it comes to, because like I said again, I wanted to mention this, the Nixon tapes. I got to ask about this just because I've been diving down this historical thing with Kennedy, and I've been listening to White House tapes. I have not even attempted listening to Nixon tapes or anything like that. Could you explain a little bit about what those are, and what piques your interest in it?
Okay. Yeah, that's well, the famous Watergate tapes. That's what everyone will know. When the hearings were going on and it was revealed that Nixon had a taping system installed. It started in February of 71 and it went through July of 73 when people in the White House learned that it was going to be revealed that they had a taping system, they immediately shut it down. Um, Nixon wanted accurate records, as I'm sure every president did, accurate records of what went on. So, history would know what he did as president. And he didn't like having a person, a stenographer in the room taking notes because he felt it inhibited the conversations. And Lyndon Johnson told him about him having things taped. And so Nixon finally decided to have a taping system installed. And if you read the National Archives description of it, it was wrong for all the wrong reasons. The quality of the tape, the way it worked. Nixon was not technological, so it had to be voice activated. They used those big old, 16-inch reels of magnetic tape, and the sound quality is often bad, very hard to hear some conversations. And when they first came out, years after, the archivists had worked on them, and when it first started, you had to go down to the National Archives in College Park, Maryland, and put in a cassette. Remember cassette tapes? You had to put a cassette in the machine and listen to the conversation. Now things are being digitized and everything's online. The people who first got interested in the tapes were historians and political scientists who wanted to study the Watergate phenomenon. But a colleague who got me into it, and we've worked on it, and we're still working on one more paper, realized that the conversations were about everything. Anything that they talked about when there was a tape present was recorded. So our interest is in how the economic policy decisions were made. One of the big things, which was always suspected, but the tapes, really bring to light, is Nixon pressured the Federal Reserve considerably to pursue policies which would drive unemployment down in favor of his reelection. And then even after that, he continued that. And that resulted in the very high inflation that we experienced in the 1970s, where inflation averaged for the year, for every year in the 1970s, it varied considerably over the years, but the yearly average for the decade was like 8%. And that's what we're seeing now. And we're saying, oh my goodness, this is so terrible. A lot of it came from, the Nixon years and his pursuit of his political goal, which was to be reelected. And so we've spent a lot of time looking at his decisions about monetary policy, his decisions about wage price control, and then the decision to end the fixed exchange rate system, which the US had really created and went into operation after World War II, and then ended really when Nixon made a famous television announcement on August 15th of 1971, where he floated the dollar. And now we have floating exchange rates, but that was not what people thought was going to be the case in the early post-war years. And they felt that you needed to have fixed exchange rates for the economy, for trade to prosper and for economies to prosper. So it was a huge move, economic move. So when you listen to the tapes, you hear everything. There are ways when you know what you're doing, you can skip parts of conversations, but sometimes it's just interesting to listen to a lot of the conversation and a lot of the things that he said, and the way it was said and the way they talked about people and his prejudices and his paranoias, and you can hear all of that. But there's 3,600 hours of tape.
It's a lot.
That, if you work 40 hours a week for 50 weeks, that's 2,000 hours. So you have almost 2 years of work just listening to the tapes. And then if you're trying to record them and you're trying to listen to them and make accurate transcription of what you heard, because a few conversations are transcribed, most of them are not. And so a lot of what's been transcribed and put down is done by the political scientists and so forth. So when you're listening to the economic conversations and you want to write down a quote accurately and put it in something you're publishing, I've spent 45 minutes on a paragraph. because what you think you hear and you write it down, and then you replay it and say, no, I didn't get that word right. I didn't get that word. Excuse me, didn't get that word right. And you want to be accurate, you know. That's very important in scholarly work. You want to get everything accurately recorded. So you spend a lot of time listening to just brief parts of conversation to try and understand the decision. And that's what we're interested in, is the decision making, how these decisions were made, and then looking at the economic consequences of the decision.
Did the decisions that he was stating to the public match any of the decisions that were being talked behind closed doors? I feel like it probably revealed a little bit more of the man that everyone thought that they knew.
Uh, um, and if you read the literature, and there's a huge Nixon literature, a lot of the people knew even before the tape, sort of had a sense of it. Like Nixon froze wages and prices on August 15th in 1971. People, you know, he was doing that to deal with inflation. He had worked in an office of price control for briefly in World War II, and he hated wage price controls, but he liked the wage price freeze. He didn't really care that the controls worked, but it looked good. So some of the things that were done were clearly done well, a lot of it was done for political reason. It wasn't really done for good economic reasons, and the policies weren't always the best policies for the country, but they might have been good policies for his political career. And that's one of the main takeaways we have. And you know, that's true of a lot of presidents. A lot of presidents want the economic policy makers to conduct policies in ways that help their reelection. George H.W. Bush, the first President Bush, said that one of the greatest mistakes he ever made was reappointing Alan Greenspan, because he didn't feel Greenspan did enough to try and stimulate the economy when he was running for reelection in 1992, which he lost to Bill Clinton. Now, Clinton, Bush II, George W. Bush, and Barack Obama were all pretty much hands off. But then, of course, Donald Trump appointed Jerome Powell to the Federal Reserve to lead the Fed, and then became very critical of him when he adopted policies that Trump didn't like. So we've seen throughout history presidents who've tried to push the Federal Reserve to do their bidding. Nixon wasn't the only one. Nixon was maybe the most subversive and the most successful. He put tremendous pressure on Arthur Burns, who had been his friend, who he appointed to lead the Federal Reserve. When Burns wasn't doing what he liked, he had people in his administration spread false rumors through the media to try and influence Burns and get him to do his bidding. He did other things. He went after an economist at the Bureau of Labor Statistics because he felt the man was against him. The man happened to be Jewish, and Nixon had this thing about people who were Jewish. He was always very critical. He made a famous statement that in July of 71 that there was a Jewish cabal in the BLS that was out to get him, and that was part of his paranoia. These economists were doing their jobs, but and something funny happened with the report on the unemployment rate that Nixon didn't understand, and that he hit the ceiling when the explanation was given for why unemployment fell, and that he wasn't given credit for reducing unemployment. He was furious. So yeah, and I was very young at the time. I was just married. I entered graduate school. I went to graduate school at the University of Virginia. We got the Washington Post as our daily paper. So I was reading Woodward and Bernstein before anybody knew who Woodward and Bernstein were, because it was on the front pages of the Post every day. So going back and listening to these tapes is in a way is reliving my early years in the 1970s when I was in grad school. And Watergate, we were captivated by Watergate.
I'm captivated by it. I know a little bit about it. Mostly I've talked to William Colby's friend, who was who's his name's John Randley. And he spoke about what, like, he made me think differently about the CIA. I'm into that government, like, what are they doing, drugging people? I'm into that stuff. But he put it in a different perspective. He goes, how do you think you should think about it? And I'm a patriot at heart. I just want to recognize dark things that, isn't fair if you're not disclosing that you're doing it. And Watergate, I mean, there's some damning tapes of It's Hunt when he made the dying video for his son. He was one of the secret agents. And he was like, oh, yeah, we had ideas of slathering LSD on a driver's steering wheel, hoping it would soak it up through their skin and drive into traffic. And I'm like, I don't care if you're doing it. I don't even, you're just talking about it. And to me, it's just like, it's putting in this perspective of like history. And it's like, that's fascinating to me. But people would just be like, that's conspiracy talk and walk away. I'm like, I don't know what you want me to say, but Watergate was real. It happened. The CIA was doing a bunch of stuff. William Colby exposed it. And, they said they never recover from this, but it was just like this aspect where you're getting a different side of history that's not normally taught. That's why people write books about it. But this weird, I guess, people not acceptance of it, but also acceptance of it on some crowds. Like, I don't know. I don't know where you stand with Watergate, but
Well, as I said, it was fascinating to us. I was probably more interested in the political sphere then than I ever was since in my life. We were glued to the television that summer of '73 when they were having the hearings. It was just fascinating to us, all that was being revealed. Um, but I think it's also one of the reasons why people start to lose faith in government, because they saw, basically how corrupt the government could be, the things that could be done, how they were trying to manipulate people. Nixon did a lot of things. Watergate was just one of the many things he did to try and ensure his reelection. As I said, he also manipulated the Federal Reserve to pursue policies to have a strong economy, because people and economists have studied this forever, that if the economy is really strong going into an election, it really favors the incumbent party. A lot of talk about the election coming up this year. How are the Democrats going to fare? The party in power usually fares poorly in midterm elections. Are they going to be blamed for inflation? And there are all the other issues, Roe versus Wade, and so it's going to be an interesting election to see how it comes out, because usually things like high inflation, high unemployment work very bad for an incumbent. Now we have very low unemployment, but we have high inflation. So how is that going to work out for the Democrats in this election? I'll be, as an economist, I'm always fascinated to see how much economic conditions affect an election, because clearly they're not there. They often have an influence, sometimes they have a big influence, at other times there are many other things that are far more important on voters' minds. So
well, our
it,
gas was going up to $5 and it just dropped down to three something. And it's like midterms are coming up. And if you say that, people go, that's a conspiracy. I'm like, I mean, it only makes sense if you're so people are about to vote for you, you would try your best to make sure that, that went down a little bit just so people don't have a bad it's their impression already going into the elections was like a terrible, like, get this guy out type scenario. I'm like, I guarantee you that's throughout history. You could probably trace it like that. It only makes sense. Increase the conditions and then go back to what it was before once you're elected again.
yeah, no, I think there was a lot of problems with the gasoline prices, and a lot of it had to do with refining capacity and so forth, because the oil companies are shutting down refineries and they aren't going to reopen them because they see the future, and the future is the big push for electric vehicles and vehicles that don't create as much pollution, and that's happening, and the companies, the car manufacturers are adapting, and the oil companies are adapting, and it takes I don't know, hundreds of millions or billions of dollars to reopen a refinery, and they aren't going to reopen it for 1 year. That's like a 10 or 20-year investment. And so we had that shortage, but now people have adjusted. People are driving less. Consumption is down. And not surprisingly, the price has fallen. Um, I saw prices yesterday. I guess it was whenever I drove by gas stations yesterday or Saturday. I saw prices in Delaware and Maryland like 339. Our prices because I'm in basically the same area as you, and our prices tend to be lower than surrounding states, but higher than a lot of other states as you go south or other places. But we tend to be slightly below the national average. And so our prices have come down pretty well. And some people have said they think the price in our area here might be below $3 by the end of the year.
I hope that'd be great.
Yeah.
Um, this is a question I wanted to ask you because I was trying to understand because, like I said, I don't know if I messaged you this in an email, but I was trying to understand the Industrial Revolution, and I realized how kind of controversial it was. Only controversial because it's split in two directions. There's some people that see the huge benefits of it, then there's people that see a different side of it as well too. And then when I was like, all right, I need to talk to a historian to figure out this. Like, I need to talk to a historian about the Depression. But what I kept coming across was historians of economics, and I was like, wait, so is it a different historical record when you're checking like I guess the actual historical moments, but then if you look at like I guess the economics of the situation, you're able to depict better information or pull out better data from that to be able to depict the times?
The information is the information. It's either there or it's not there. Sometimes historians, economic historians, but historians in general will often go digging for information. Um, you can go back. I have a colleague who's a economic historian who deals with earlier times, colonial times. I mean, my interest is mostly in the early 20th century. And he goes back to records of old newspapers to collect data. And he's amassed huge amounts of data about prices, particularly for contract labor, people who came to the US as indentured servants and so forth. And he basically has created a historical record by all the work he's done going back through old documents and so forth and amassing a series of data about this, which has proven very useful to economic historians who are interested in that. So historians can, if there are records that exist, there aren't necessarily, when they start out, records that you might want to use as data, but over time, if you can go back and collect whatever information is available and put it together, you create a data set that will tell you something. The thing about the Industrial Revolution is certainly we would not enjoy the life we live today. You and I would not be speaking on Zoom if it were not for the Industrial Revolution. But, it was difficult. A lot of people who worked under those conditions. They weren't always pleasant conditions. They were often difficult, um, and demanding. And you didn't skip out at lunch to go run an errand. You worked in the
Yeah.
factory. You were in the factory all day, and they're often there 6 days a week. There was a local bank here. I was going through their records from the 1930s, and they were open on Saturday nights. They actually had hired I think he was a physician, but who spoke English and Italian to work with the immigrant community, so they could come in and speak to this gentleman in Italian, and the bank was trying to get them to open bank accounts. But there were a lot of, I guess, immigrants in this part of Wilmington where they were. This is Wilmington, Delaware, who mainly spoke Italian. So they hired a doctor who spoke Italian to try and increase their client base. And they did it on Saturday night because a lot of these people worked 5.5 or 6 days a week, and Saturday night was the one time they could come to the bank.
If I'm not mistaken, you can thank Gerald Ford for that. He's the one that invented the Sunday off or the one day off.
But he also, Henry Ford, you mean?
Yeah, Henry Ford. I say Gerald Ford.
Yeah, he was a president. Uh, Henry Henry also very famously did the $5 day, which was considered to be about twice at the time. This is hard for people to believe today. At the time he did it, it was probably twice the wage people said he would have had to pay to get his workforce, but he felt it gave them better productivity. And so he started paying these men who worked on the assembly line all day in a factory. He paid them $5 a day, and that was considered a really good wage. They made $25 a week. There was no income tax, there was no social security tax, it was a different time. Well, there was income tax that started in 1913, but for most people, if they had enough income to pay income tax, it was 1%. And a lot of people didn't even earn that much. Um, so $5 a day was a lot of money.
Yeah, that was a revolutionary thing to do, incentivize people, give them a higher rate for a day just to have them produce better work or more work or just be, happy to work. Usually you get like a bonus at the ending and nobody tells you that you're getting a bonus at the end. And then afterwards, you're like, oh, thank God I did all that work. But it's like if you incentivize them in the beginning to work harder and do better, then they will because you're offering a kind of a prize at the end. It's kind of like why we do competitions and stuff like that. But he also did stuff when it came to his cars. He never really, I don't know if you ever see that Ford versus Ferrari movie, but they were making only a certain number of cars a day. And he was like, we could up our value if we just did machines. He was like, no. And you can see it as like maybe he's doing it for his workers, but a lot of it is like the craftsmanship that goes into what that car company kind of is in a sense.
Yeah. Yes. And he was revolutionary, and he revolutionized the car industry, and he made the car affordable for the average individual. And that had a big change on society because factories and so forth tend to be located in densely populated areas, and workers would walk to work for the most part. And once people were able to afford an automobile, they were able to move outside the cities and start to develop the suburbs. And then they could drive to work in their car and then drive home at night. And really, a lot of cities, particularly in, say, the Northeast, North Central part of the country, had their peak populations within city limits in the 1920s. And as cars became more affordable, the suburbs grew. So, the metropolitan area of a place like Philadelphia or Baltimore is very large, but the actual within city limit population is lower today than it was, 100 years ago.
I'm telling you, I gotta get a degree in economics or something like that. I totally slacked on this one area in my life, man, but it feels like you could probably understand history a little bit better by looking through the lens like that. Um,
Well, everybody has their different approach, but for me, it was the economics that made history interesting. For historians, it's the history that makes them interesting. Yeah, the history is interesting in of itself, and I like history also. But I often found that studying the economic aspects is what I really enjoy. But then I'm an economist, so that goes without saying, I guess.
well, Jim, man, I really appreciate you giving me your time to chat on my show. It's been a pleasure. Is there a place where people can find your links? Do you have a Twitter? Do you have any sites or anything where I can link in the description?
Just have my webpage at the university.
Okay.
No Twitter, no links. Just University of Delaware. And if you go to our department, we all have a web page where we can post our research record and so forth.
Well, I'll make sure I link it all in the description. It's been a pleasure chatting, and thanks for listening to this episode of Out of the Blank.